Hello, everyone, and welcome to another EXP Commercial Wednesdays. Really excited with this panel today. We were just talking on the back, catching up with different friends, and we were discussing about the opportunities in development, the capital that it takes right now, because many developers, this is not their first rodeo. They've seen many cycles of what has been going on. And this is a big one, as everyone knows, in the office product, right? Just like those maybe 20 years, the death of the malls, we do see from way back when, with the retails kind of changing, especially the malls, different concepts, trying to turn it into open malls. Now even repositioning that because we knew they were overbuilt. But the new one that everyone's kind of looking at now is the office product and the changes in the office product. So with our guests today, and we have a couple others that may or may not be able to jump on. They're flying a plane for a development project. And one I know was doing a walkthrough for his public-private partnership. But we have two great speakers right here. I'll first start with our chair of our development, Tom Palumbo. Tom, if you don't mind sharing a little bit about your background and what got you into development, or did you really grow up in development your entire career?
Sure. Thanks, Jim. Thanks for getting me on the call. Good morning, everyone. Tom Palumbo calling from New Jersey. I've been in the real estate business about 40 years, and for the most part, I was on the corporate side working for regional and national home building companies, both in sales management and land acquisition. And I retired from the corporate side about 8 years ago and started my commercial real estate business. I was very involved in a lot of land deals along the way, developing and so forth. Right now we're looking to develop properties in New Jersey and in other locations. So that's really it. I mean, my main focus is land, and I like the multifamily space. The development side right now is kind of challenging because of the lack of credit out there. There's a lot of capital on the sidelines that I believe is waiting to be deployed into development deals. I'm involved in some industrial. And right now, the industrial guys, about 2 years ago, they kind of put their pencils down when rates started to pop. Everyone's kind of waiting for rates to pull back a bit. We're starting to see some of the capital peel off the sidelines. I think the real challenge is that the pricing today isn't obviously what it was 2 years ago. But in any event, we do see some activity, and it's a good thing. I think on the residential front, on the residential development, we're seeing, it's very active here in New Jersey. It's land constraint in the state, and the public home builders are always looking for deals, looking for land. So it's still very active here on the residential front.
And Gaurav, I know you're kind of similar, working corporate for a long time, trying to do a startup, trying to do some other business before COVID. Right. And then you reinvented yourself again. So if you want to share your history, your education, all the good stuff that you do and where you're at also, because where you're at is really important also.
Absolutely. Thank you, Tom. Thank you, Tom, and thank you, Jim, for having me over here. Good morning, everyone. My name is Gaurav Khanna. I'm the founder and principal of Valad. And before we go into the past, I would say the present is amazing. We hear about all the challenges in and around New York and in and around the country and in the real estate sector, and those challenges are going to create opportunities, as is what I'm seeing. So a little bit about the background. Similar to Tom, spent close to 25 years in the corporate world. Most recently, 5 years ago, I spent a decade running acquisitions and asset management at Vornado Realty Trust, where I acquired over $2.5–3 billion worth of assets all over the country, repositioned some of those malls that have been in conversation right now, acquired and repositioned office buildings in New York and elsewhere, Washington, D.C. I was involved in the spinoff of Urban Edge, which was Vornado's 20-something million square feet shopping center business. And then the focus was New York. So I acquired all the fun buildings you would hear about on Fifth Avenue, starting from 666 from Jared Kushner to 685 Fifth, and gone and on. And then I was instrumental in repositioning or doing all the assemblages in the Penn Plaza area, which is going through a massive redevelopment right now with billions of dollars being poured in. So had a lot of fun in the corporate world, and in 19 I took the plunge, December 19 to be precise. Yes, I timed it just before COVID, first entrepreneurial plunge. And then as Jim mentioned, like pivoted and pivoted, of course, the original business plan ended up going, I wouldn't say it disappeared, but everything is on the back burner because whatever business plans were put together, it were around recreating the value in real estate, right? Whether it's repositioning the shopping centers or malls, and now how things have pivoted. I'm involved, in quite an interesting repositioning projects in New York City and around the country. Valat focuses on asset repositioning, capital restructuring, asset management, and investment advisory. Um, Basically, whatever is the pain point of our clients. 3 years ago, the pain point was, what do I do with this tenant? And we would come up with a strategy to make the tenant happy. Or what do I do with my portfolio? It's all concentrated onto New York. And then we would create strategies of, okay, you can diversify into different markets. And in the last 6 months, any guess what's everyone's biggest pain point? What do I do with the $50 million loan on a $110 million building, which was 110 till 4 years ago, is now worth 30. So now we are involved in helping our clients restructure their mortgages. But everything, as a principal, we don't wear a broker hat. We draw we have affiliate partnership with a lot of brokerage shops, but so we keep our position as a principal, as a fractional CIO, as you may say it, as an extension of your team. And then I also have an investment arm. I've been acquiring some properties, multifamily along the East Coast and growth-oriented tier 2 cities. And of course, our backyard, New York tri-state, very, very bullish and very active.
Gaurav, thank you so much. And Tom, let's just jump right into it. So these are all these large projects. And sometimes when we say, okay, these REITs, right, we all know it's hundreds of millions, if not billions of dollars under management. How can, let's say, agents, right? How do you work with agents? What can agents do to work with you, especially to make money? Whether it's home builders, because some of them have relationship with home builders doing their new sales, luxury buildings, right? How could an agent, residential or commercial, get involved in the development kind of process? Because I'll start with you again, Gar. Since in New York, running Vornado, I'm sure some of the top commercial brokers, I know we've had talks and you pretty much know them all. How is your relationships with the brokers, from an institutional development asset management firm?
The relationship is strong, and it has to stay strong because I would say I gather my courage because of my relationship with the brokers, right? Because they're my boots on the ground, right? I cannot, even though I say New York City is my backyard, I know every street, and I've literally over the last 25 years walked every street and I know every building, but I'm not tracking what's happening on 40th Street between 6th and 7th Avenue, right? There is my local broker friend who is continuing the relationship with all the building owners, right? And all the retailers and whatnot. And the relationship ranges from, yes, some of our common friends, in the top bracket, all the way down to, folks, young newcomers who are hustling on the street and won't be surprised if the next best deal doesn't come through that top guy, but it comes through that hustler on the street. So it's very, very important. And interesting that you asked this question. I was having a chat with a friend of mine who has been an office leasing broker for the last 40 years of his life, right? Of course, I won't name him. He came to me recently. He's like, well, you know what? I haven't made a dime in the last 2 years. He's focused on downtown, right? What can you do? And he's like, I'm thinking of switching career. I'm like, you have a relationship which anyone in the city would rival. It's like, but I don't know what to do with the relationship. I'm like, you were earlier helping them with their pain point, which was leasing that building. Okay. Okay. No tenants out there. So no leases happening, but you still have the relationship. What is your contact's biggest pain point right now? What is he trying to do? Why don't you give him a solution? And he's like, but I don't have the expertise. I'm like, well, this is where we are going to partner with you, right? We will, we are going to go approach the ownership together. You're going to be our partner on this venture, not just someone who's making an introduction. So that's just one example, but there are so many ways. Another thing which is happening in a lot of broker friends in the investment sales side, they are trying to get listings to sell the building, but they don't. And when an owner is looking at selling, he will call 4 or 5 brokers, get a BOV, broker opinion of value on those assets, and he would compare it to his appraisal, and he would assign the contract based on that. 90%, 99% of those listings are not selling because there is a huge variance between what a seller think the value is and what the buyer think. And that's another area where we get involved. We help the broker truly understand. We do the valuation as an investor with a forward-looking view without relying on the comps, because what comps are you going to rely on? Last 5-year comps just tell a wrong story. So this is another way we are helping the brokers, right? Bake the cake, come up with the right valuation so that it can lead to success, because no one makes money till the transaction happens. So that's where our head is.
And Tom, since you are running our development at EXP as one of our chairs, I mean, what are you seeing from the agents? You're telling me a lot of pain out there, but like a lot of our PDs, not your first rodeo also. So how are you educating, managing, training, let's say, brokers to really create some opportunities in business? And what are you seeing, and what are you doing with agents that are friends and new people coming up to you?
So I think, yeah, it's a challenging time right now, but if you've been in this business long enough, you've kind of experienced the ups and the downs. And now's, candidly, it's a good time to kind of retrench, take a step back, take a look at your business. Right now it's a quiet time. It's after 4th of July weekend. You've got everyone's on the beach or getting children ready for school and college. And, we've got a couple of weeks, so mid-September, it'll start to ramp up again. But I think it's a good time to step back and take a look at your business, maybe put a plan together. If you're new in the business, I think it's good to maybe understand why you're in the business. What is it that attracts you to the business? Pick an asset type that, you like and you want to work with, whether it's on the leasing end, the sale end, and maybe try and team up with an EXP mentor or someone that's in the business. As an example, if you want to work land, I've been in land and be more than happy to team up with you on land. Todd's running multifamily. Team up with them. It's good. In my opinion, I think, especially today, you need to be part of a team. Right now, Jim, you're forming this ecosystem with EXP, with all this talent. I think it's amazing. And we're part of the EXP team. And now you have everyone that's involved with all these different committees and all these different asset types. So whatever asset type you want to work on, try and team up with that person, an individual. And you know what is, it's really making phone calls. I'm back to making phone calls. I have a lot of relationships and I can just network, but for the new person or the person that wants to get started, I think one of the biggest secrets in this business is you need to talk to lots of people every day. You just need to pound it out. You need to make the phone calls. And when you're part of different teams, and by the way, if you want to do multifamily, if you want to do industrial, if you want to do land, it's okay to do a couple of things, different teams, and then work your own business, your own piece of your business, your own piece of business. But it's good to do conference calls. I'm a big believer in third-party calls. If you have someone that's interested, get one of your mentors, get someone else on the call, get you on the call, Jim. Get someone on the call to do that third-party call, and then get in front of people. And it's the multiple means of contact. So it's not just one contact, it's these multiple pieces of contact, the initial call, the conference call, the face-to-face, and you continue that. I think that's one of the biggest challenges. You just don't talk to enough people. And it's not making the phone call, and if there's no contact, that's a call, but it's not a contact. So I think that's where people are maybe getting lost. Now's the time that you really need to start making more phone calls. It's as simple as that. There's a simple formula that folks can use, and it's trying to work 2 pieces of business a day, which is, either making an appointment or being at an appointment, and try and do 3 pieces of that a day. In other words, you're going to make 2 appointments, and then you're going to be at an appointment. So these 2 pieces 3 times a day, it sounds simple, but it's not easy, but try and do that. Get on the call. If you make 3 appointments, that's 3 points of business that day, right? If you are at 3 appointments, that's 3 points of business. So try and work that into your daily routine. It's really hard to do, but you'll see the end result is it works. But I think the key is going back to phone calls. Figure out what you want to do. If you want to work multifamily, contact Todd. Read up on it. Be an expert in that, in multifamily. Go on podcasts. Listen to the experts, and start making the phone calls with Gal, with you, Jim, with me, whatever you want to do, and start that. You have to create and build your own momentum. Now's a good time. It's a great time of the year to put that plan together. I see tremendous opportunity. It's just like you hear, like Warren Buffett, now's the time to really, when looking at stocks and the market's kind of in turmoil, right now is a great time to build a base with your business, with your real estate business. I see, when I drive down a commercial corridor, I see tremendous opportunity. I see so many buildings. And I think we've talked about this in the past. I don't believe there's enough commercial real estate brokers, especially in New York, maybe New Jersey and other markets, to service all the owners of all the commercial real estate assets. It's hard to cover New York City. There's a lot of ground to cover. It's really hard. So if you're in the city, there's tremendous, anywhere, you have to create your own opportunity. Land, there's a lot of land out there. Right now, there's a lot of busted deals. It's a good time to call these people. A lot of people need, I think more so today than, in down markets, owners of real estate need the services of a commercial real estate broker. That's where we come in. That's where you make the phone calls. I was making phone calls yesterday with a mentee, and we got a couple good leads, couple good contacts. So it's, I'm back to making phone calls. I love it. And what happens is you create that momentum, and you feel energized. If you don't make the phone calls, you're not creating the business. You feel down, like the market's not treating you fairly. But that's really what it is. It comes down to, making the phone calls. As far as land, there's a lot of different ways you can source land. I've said this, I built my career on knocking on doors on municipalities here in New Jersey. You just put a plan together, you go to the municipality, you ask them, there's a lot of projects that maybe are approved that aren't built because the capital's not there. There's deals there. There's a lot. I built my business based on knocking on doors. And what happens is you talk to, the business administrators, you talk to the deputy mayors, you talk to the mayors, you talk to the planning. If they're a large enough municipality or city, they have in-house planning and engineering. Talk to them, find out what's going on. A lot of them have development status reports. You have the name of the applicant, and all the applicant professionals. You just call them, start that dialogue, and start talking to them. The other thing, what I tell people to do is drive your market. Yeah, you walk your market, you know every building, you know everything that's moving, if you drive your market, you're going to start to see more for sale by owners, or old for sale by leased by owners, the old signs and everything else. So go knock on their doors. There's tremendous opportunity just knocking on doors. It's the old ground game. A lot of people don't want to do the ground game. I'm kind of a ground game guy. I like being on the ground, meeting people, knocking on doors, and it's a great way to build your business. So,
well, Tom, going on that, a lot of us, that's broker 101, right? Make a certain amount of calls, new calls. Don't talk to your friends all day long. Make some new calls, book some appointments, and just keep moving that momentum. But I do like, especially in development deals, you got to put teams together. No one person by themselves can do it. You got to put the teams, you got to leverage the relationship with the boots on the ground, the agents in the streets, and really the best ones. Everyone, like yourself, being in the industry, you know who to call and pick up the phone to get some kind of answers, whether it's public-private partnerships or the right people to talk to, right, within the team or the ancillary teams to really build this. And one group, I know he's doing a walkthrough right now on a project. He's doing public-private partnerships, getting RFPs, bidding out, as a diversity or minority-owned business. I mean, there's so many angles of what people are doing right now. And I'm being on the West Coast, Tom, and we see this in downtown LA and San Francisco. We've never seen so much crisis of buildings being sold 20 cents or less on the dollar. I mean, people want to sell it even at those numbers to just get out. So let's do another pivot. Let's talk about the capital, some public-private partners, because we know it's not money that's going to bridge it. And then also, I know Sonny and Rich and others create deals. Sonny, thanks a lot. You're the one that got Todd to fly out to Dallas for your project. And also Nelson doing ESGs, because we know in New York, you can't even do anything now without kind of having an ESG green plan, right? They're starting to do this in New York. So let's start talking about the capital.
I just wanted to add something to what Tom said in terms of giving advice to the brokers, right? So I was making notes. So before we switch to capital, I think this is important. So one thing he said is like, find the theme, right? What asset type do you want to focus on? Because, you need to really know thing inside out. But what I would say is don't chase a theme. A lot of people start chasing theme, or industrial has been on a rise last 3 years. Let's chase industrial, because by the time you're getting in, it might be on a downward spiral, right? So that's one. Two, yes, make phone calls. Discipline is the key. I set aside 2 hours for phone call, 2 hours for lately is on Jim's advice, spending time on LinkedIn and other things. So having the discipline. So make the phone calls, but then my personal favorite, get a meeting. Nothing beats than having an in-person meeting if you can, because those one-on-one conversations, meeting then allows you to seal a deal, whether you're trying to get an assignment or not. So anyway, just wanted to share my thoughts here.
Those are great thoughts, because that's why we have the power of the group, the experience and leveraging the group, the network of our group, but leveraging everyone's outside group, like Tom said, that is very powerful stuff. So let's go, Tom, with you now on capital. We're saying how hard, but you've been around, you've seen it. What are you seeing how capital, or let's say public-private partnerships, could make deals happen right now in the market?
Well, I think, the capital, like I said, the capital piece of it is what we're seeing is a lack of capital in the market, and there's a lot of opportunity. There's a lot of development deals. I think it's just a matter of finding the capital sources right now. I mean, I think there's just a tremendous amount of opportunity in different asset types and different markets. Some markets are very strong right now. But I've got some things I'm working on in South Jersey right now. It's like I said, the capital is not there. It's on the sidelines. It's starting to peel off a bit, jumping into development deals. But I think that's the big look. If you have a capital partner, if you have the deals are out there. And I think, Jim, going back to what you said before, how do you go about doing it? It's finding, like home builders, the national home builders. These guys, you have to understand the public home builders, they have to report to Wall Street. They have to report, quarterly and roll up to the corporate level, how many lots under control, how many starts, how many permits, how many closings, that type of thing. So they're always and constantly looking for deals. So that's public, those are public companies. They have the capital to buy land. So a broker here on a call, maybe start calling some of the national home building guys or the public guys. They have capital. They have to deploy. The private capital's kind of sitting, it's there, but some of the guys, it's on the sidelines right now. So I would start with that. I would start with working with the public groups. They're always looking for deals.
Gaurav, how are you? Because I know you were raising capital, doing some institutional, a lot of your friends, especially in New York, that's the money center, right? That's where the money is. And what are you seeing and what are you hearing, with everyone's dry powder, not just domestically, but internationally?
Yes, I would say capital is there, right? From my perspective, it's trying to find the right deals, because not investing over the last several years, there are so many funds which have been put together, and I know at least 5 outside the US. There are at least 100 in US. There's a lot of capital, right? The challenge is investors just by nature are risk averse, right? If there is a proven business plan, they will just roll it in. Right now, the challenge is that all the proven business plans of the previous several decades are out of the window. First, when the retail shopping center mall business plan, it got disrupted, as we all know, over the last 5-7 years. COVID ended up being a big nail in the coffin for it, but it had started happening, since Amazon showed up, right? We all know, right? So I won't go too deep into it, right? Then the industrial business plan was very sound, and as a result, all the capital went into it to a point where the cap rates in industrial came down to almost 3.5. I actually know a friend of mine sold an industrial around New York for a 3.5 cap rate. Then multifamily, with all that's happening, especially in the New York, with affordable, with 421A sunsetting, all those things, the multifamily business plan also kind of get side railed. And then our favorite, the office business plan, where office buildings you would put in the core or core plus risk category. When you think about it from the perspective of pension funds or sovereign wealth fund, they actually have terminology for the different risk profile of these. Opportunistic, which is ground up development, which is what Tom focuses on. Then you have value add, you have core plus. What is there in the core plus bucket now? Tough to say, right? So investors, so there is money. I'll give you an example. I put together an amazing deal, and as I talk about it, it hurts because finding a good deal is like finding a needle in the haystack, and especially in this market, right? Years in making through my relationship with someone on one of the densest street in Queens. I found a deal, repositioning of a 100,000 square feet big box, for which we ended up securing one of the major national grocer as a tenant to take the lower level space, right? Taking care of 60% of the building, okay, before we acquired it. And then we knew that if we put that anchor, the other spaces on the grade will be able to fill in a heartbeat at record rents, right? So far, so good. It took me, and again, I'm bad at fundraising, because owing to our background, like, being in the corporate 25 years, we always had a balance sheet, or there was a fund at Vornado VRLP, an $800 million fund. So we knew we just take it out. So I haven't done this, right, that much. But it took first 4 phone calls. We got $17 million of commitment. Everyone loved the profile of the deal because with my math, and everyone knows that I'm very brutal when I put the numbers, I was getting it to an 8.5% unlevered yield on cost and 44% IRR if we sell in 3 years. And that was our base case. So investors, they're like, all right, knowing you, we will do our own best case, but we are in. At the last minute, something came up in form of environmental, and I had to pull the plug, right? And it's just like draining, right? And now I had to go back to the investors and say, sorry, I'm not going to take your money. They're like, no. Let's figure out a way. I'm like, you know what? There are known knowns I can handle. There are known unknowns I can handle, but there are these unknown unknowns. I'm not going to risk your capital for the unknown unknown. We just don't know how shitty it can become. And they appreciated it, right? So long story short, a lot of capital. All my friends, if I hadn't taken a plunge from the C-suite, I would be still there, but my friends are still there, right? Running all these big companies. Once a week, I get a call. Hey, we're looking for a deal. We need to deploy capital because a lot of these acquisition managers, they have to justify their existence. They haven't bought anything in the last 2 years. Why are you taking that multi-million-dollar salary, to be very candid, right? So capital is there. It just need to find the right sponsors, right? The right deal. And, and little bit is the macro environment where there is capital is also hesitant, Tom, and you would know this coming to the New Jersey, I won't say that much, but New York, because of the headline risk. Oh, New York, we don't want to push anything New York up the chain, right? Because, someone will slap us. And then on top of New York, you put office. Oh, no way. Retail, no way. But that's 90% of New York. That's where the value is going to be. So it's just a matter of time. And that's why we keep on digging in. We keep on hustling. We take a punch here, take a punch there, and come back and continue.
And I love that where you're saying, like brokerage, finding the deals, working with agents, working with the right capital partners, the right sponsors, been around a couple of cycles. But to take your call, Garv, you and Tom and others have to have those relationships built up. Maybe when they were just an analyst or a project manager, right? Some level, because later on, everyone calls, everyone knows, who's doing well, what reads, and especially when everyone moves around, it is very important. And I would say with the LinkedIn, Tom, and everyone's agreeing with you, make those calls, especially now, even if you have that Rolodex. New funds, new groups are being built up all the time.
Absolutely. Commercial real estate trades, buildings trade, land trades, everything trades. So, and by the way, it's okay to team up with outside brokers. So not just with an EXP. I mean, we have relationships. I have relationships with a lot of different brokers, and we're doing deals. So it's kind of like, we're all in this together. We all kind of need each other to survive here, especially now. And I think that's why being part of a team or teams is critical. You really need to be a part of that. There's synergy with the team. When you're in an office with traditional brokerage or traditional corporate America, you have a synergy of an office. Could be good or bad, but the synergy of an office, if there's talk about deal flow and everything else, it keeps you, it keeps you energized. Now you're in a cloud base, you're working from a remote location. You've got to be part of what you're doing here, part of this call, understanding and listening to different perspectives on what's happening in the market. So I think that's very important. But work with other brokers. Start the opportunities out there. You just have to understand that now's the time to dig deep. Now's put together the ground game, the social media, work the social media, and start networking with within the brokerage community.
Well, I love that. And even now, Garv, you're starting to use LinkedIn, and many of our friends, right? We're all going to be in the New York event with CCC. Half that group we already know. It's all friends because it is that tight world. If you keep playing, doing the job, building your reputation, credibility, you start building that network, right? But Tom, always expanding that network is key, and finding new partners, because the great thing about this business, especially in commercial, if you stay around long enough, you get to know everyone, and everyone starts moving up the ranks where you can make the phone call where they may be the CEO, the president, some executive, right? Or some partner or spinoff. And it's good to just keep those connections, because building different teams, assembling groups, just like what we're doing here, and even outside. I mean, we're just putting friends together, and it is true. Domestic, international, regionally, whatever, different, we want to keep each other and our friends alive and kind of making it through, because we all know what happens if you survive a cycle. You get stronger, right? Because you got through it. Everyone else dropped out of the game. You're still plugging away, and you thrive during this time. So a lot of people like us, and I'd say those that have been around, actually are excited with this time. Granted, it sucks, right? It sucks to see our friend, and we get these calls. But overall, if you are well positioned, you have your network, and we're early, right? Because the loans that were coming due, right? Short-term loans or development deals, broken projects, they're forced to now do something. So let's talk kind of that tracking notes. I mean, on the West Coast, one of our Valad partners too, Tom Wynn, was tracking EB5. All this EB5 money was coming. They're broken up. They're blown up, right, with all that money. So tracking, following deals, looking after what notes or what distressed construction loans. But also, I know April brought up, how do you kind of get the public-private partnership? How do you enter and engage, whether it's EB5, OZs, right? Or just doing some RFP with the city. So maybe Garv or Tom? Garv, you want to start?
Right, Tom.
Yeah.
So as far as what are RFPs and all, municipalities, cities, they don't want to see, let's say there's an antiquated mall or a closed mall or a property that's abandoned. I mean, they want to see properties developed. They don't want an eyesore in their community. So I think a good thing to do is, like, when you're out driving your market, you see a mall, you see whatever, and that's why I think it's good to get out into the market and drive. Number one, it clears your head from your home office. If you're working out of the home office, you get to think, you get to look and see what's going on. And if you see an abandoned building, if you see a piece of land that's fenced in, if you see old signs or something, go to the municipality, talk to them. Look, they're willing to talk to you, as whether you're a broker, whether you're an owner going in as a buyer. and talk to municipalities and, be that designated developer. We just became designated developer for a site in South Jersey. And it was a property that they never thought would be built. So we went in, we met with the municipality, formed a relationship with the town, and you can do that. The opportunities are tremendous. I mean, you can go there and just say, look, I want to buy that land. Is it in redevelopment? Can we put it in the redevelopment? Is it an opportunity zone? And then become the designated redeveloper, get it approved, and you can either co-develop with a developer or flip out the property, or but there's opportunity out there. That's why I say, if it's municipalities and cities, they want to hear from you. They deal with developers, they work with developers, and the more progressive cities want to continue the development. You see, the towns that don't want to grow, don't want to develop, it's what happens to real estate values. I mean, it's the quality of life. So I think it's a good thing to understand what the cities are looking for and meet with the mayors. Meet with the business, find out who the decision maker is in the city or in the town. A lot of time, and like I said, mayors are busy, and the bigger cities doing what mayors do. Maybe there's a deputy mayor, maybe there's a business administrator. Find out who's making the decisions, get to know them, meet with them, meet with the economic development coordinators. They know all the businesses that are struggling in town, or companies that want to sell their business, sell their real estate, and they know the companies that want to move into town. Do your state chamber of commerce. Go to your county chamber of commerce, start talking to these people. There's a tremendous amount of opportunity.
Yeah. And knowing the mayor, talking to the mayor, but following the mayor or following the mayor's office it's super, super, super critical, super important. You want to know what new policies are they introducing. You want to know if there is any upzoning that's being slated for anything. Go to the sheriff's office. There are a lot of sheriff sales, right? Any asset, as Tom said, as you drive around, you find something, which looks great location, but why this property, this asset looks like a zombie, right? Tenant left like 2 years ago. The owner hasn't done anything. Find the story behind it, right? Maybe it's going to be sold in a foreclosure. You bring it to an investor, or if you have an appetite to acquire it on your own. That's how great deals are found. They're not found, and this is one of the reasons I took the plunge from the corporate, because at the start of every cycle, it's not the big companies, the institutions who jump in, right? It's the little guys, the guys on the street, the guys who are small, nimble, who can quickly, pivot and hustle. Those are the guys who, in every cycle, create the initial value. And institutionals, the big capitals, show up, a little later when the initial risk has been taken off. But guess what? Risk equal to reward. So if you are taking the initial risk, the reward is going to be tremendous, right? More on public-private partnerships and development deals, as what Tom has been talking about, right? Having the right development team in your back pocket or in your friend circle is super important, right? Knowing the right zoning guy, knowing the right architect, because there will be questions which are going to be, some of the questions are above my pay grade or my mental capacity. And this is where I rely on my strategic partnership with architects, contractors, zoning attorneys, right? They are the one who can, help you really figure it out very, very quickly. They are the one who have relationship at the DOB, at the mayor's office. And one real example, I bought a 4.5-acre parcel of land in Richmond, Virginia, a couple of years ago. Jim, you know about it. It was on one of the very, very prominent high street in Richmond, right, where you have beautiful boutique stores and restaurants, but the entire street is commercial. And this parcel was a medical office, right, and it was zoned commercial. I partnered with the local architect who have Baskerville is his name, big architecture firm, and the founder lived in that area for the last 70 years of his life, right? I brought him as an architect, but also gave him equity into the deal. He came in as a partner. And guess what? Before closing, with a $20,000 or something soft deposit, he got me the SUP approval, changing it from commercial to residential. Before closing, right? So that's the power of having the right partners who have the right relationship in the mayor's office.
Yeah,
Yeah,
that's
I
a
love
great
that.
point. I was just, that's a great point. You have to know who you have to have your professional team, but if you go into a city or a town, you've got to understand and who the players are, the professional, who's the, land use, who's the engineer, who's the planner. You have to, and if you can bring them on your team, I think it's critical.
Tom, and just watching it from a broker's perspective, we all started, or I did, you started brokerage, and usually I always see them take different path. They actually become a syndicator or a developer because of just the deals and just so many. And Garv, you brought up a good point too. And Tom, I'm sure you did. Having somebody in your back pocket while you have it under contract, writing the right legal terms to allow you to rezoning, reposition, especially if you have a tenant in tow, right? Investment grade, and you're doing a pad or something else. I mean, these connections with the city, with some, very bright individual structuring these deals, right? During your due diligence time, locking up deals. I mean, that is the magic, right? But that takes a while before you get to do this.
The other thing too is there's a wealth of opportunity if you just follow the cities and municipalities, find out what, rezoning, land, master plan, when they're updating their master plan, there's tremendous opportunity there. I think it's a lot of work. Land takes time, by the way. I mean, land, if you're in the land business, it takes time. So you have to plan and budget accordingly if you're going to, focus on the land. But you could follow municipalities or counties or, the state and find out, what's happening in each town and each county. A lot of counties, you can go online, by the way. You can go online. A lot of counties will have a development status report and, all the projects that are in the pipeline, and whether it's residential or commercial. It's a great way to find out what's moving in town. I mean, we're commercial, bro. We need to know. Gal, you've been by every building. You've walked by every building. You know all the buildings. You know anything, and if there's any change, you know what's happening. So I think that's important. You need to know your market. You need to know what's going on. No one's really doing that. No one's really, as far as I know, if here, if you can go on the municipal websites, look at their master plans, look at any correspondence or any meetings. You look at the meetings, look the minutes, look at the agendas, find out who's before the board, and start calling these people, start talking to these people, find out who's buying, look at tax records, who's closed on property, find out what they're buying. Guys, you're right. Buyers are out there. The opportunities out there. There's a lot of guys out there, like Gal said, nimble, that are out looking for deals, and deals are being had in today's market. So I think it's a great time. I think it's a great time to start sourcing deals.
Yeah, and just on those lines, and Jim, you know about it. Like, I've been also teaching. I'm an adjunct professor at NYU for the last several years. Train numerous students, and one exercise I give to students, right? Like, if I'm talking about a specific asset type, I'm like, okay, just fictitious case that someone shows up and you have to make a $50 million investment in your backyard, right? Right? Put a white paper together of what asset type would you, where, what asset type, and how would you approach the whole thing. Sometimes amazing business ideas comes out. Amazing business ideas, right? So, but it needs commitment to, whatever you would want to call your backyard, right? I can't sit here and assume that I'll do something big in San Francisco, right? Or in LA, right? For that, I have, Jim is my partner, right? Because he knows what's happening on the streets there. But, super important to drive around. Another thing, which just a little bit of my secret sauce, how I find good opportunities. And this is something I've been doing since my Vornado days. You want to drive, but New York City, you cannot drive during the weekdays. So Sunday morning, I will go around for a spin. And many times, Steve Roth, who was the founder of Vornado, he would join. Rather, I kind of got a hint of doing something like this, because a lot of time he would be just driving around and he would be texting me. It's my Sunday morning. I'm working like a jackass. Like, I don't want to, like, I'm like, why would he just send it on Sunday morning? And then I realized he would drive around, because that's easy. In 15 minutes, you can go from east to west and north, south. So I do that. And then another thing which I started to do, which became a lot of fun thing back in the days, and I have to start doing it again, I will hop onto one of those tourist buses. because they take you through all the high streets, and from there you're sitting there and you see, what's going on. So again, it doesn't matter which market you are, you need to be so knowledgeable about it. And that's what's gonna become your secret sauce as you speak with a potential client, or if you're looking at acquiring something for your own self.
God, so everyone else that jumps on those hop on, hop off buses, that's a write-off. You're looking at doing due diligence, right, and research.
Hey,
So,
don't share it
so
with
that
many
makes
people, guys. Don't share it with many people outside the circle. I don't want
well,
the next time I go to a New York bus, like every freaking developer is sitting next to me. I don't want that.
this is great. This is what you learn over experience and time. These little tips, right? And if everyone hears, takes a little tip, plugs in, gets that knowledge, makes those extra calls. And we all know, with everyone saying, everyone sees the glory and the glamour of the tip of the iceberg, right? Wow, the development, you got it done. But all of those headaches, the damage, the looking at different sites, right? Before it even gets to that point, I mean, let's just kind of share kind of from start to finish so new people know where they can engage, how they can get started. Definitely please share your LinkedIn information so we can share it with everyone, so how they can contact. So I'll give you some time. But let's start, Tom, with you on how could something from start to finish, let's say a smaller, retail office or some smaller projects, how people can get involved.
Get involved on the brokerage end.
Just if they want to be a developer, what it kind of entails, and definitely we'll share your information and Gaurav to reach out and get some more information if you want to start plugging into this.
Yeah, okay. As a developer, I think you need to, if you don't have the capital, you have to find capital partners. There's, as Gal had mentioned, there is private capital on the sidelines that there's a lot of investors that are looking for development deals. The smaller guys, and you got to put your professional team together, as we just mentioned. You need to know who the engineers. Find the group that you feel comfortable with. And if you're looking in a certain county, or find out who the land use guy and the engineer, and put your professional team together. So have the capital, professional team. And you could start talking to, there's a lot of different ways. Like I said, knocking on doors with municipalities, start talking to engineers that or planners that reach out to the brokerage community. Look, a lot of brokers out there have land deals that are, maybe overpriced, or, maybe the seller's ready. I would network through the brokerage community, network through your warm market, folks that in the business. And just you're going to look at a lot of deals. This is not something where you see the first deal or you're going to buy it. I mean, you could look at many dozens and hundreds of deals. You want to find the right deal. And Gahan mentioned, you got to find the right deal. Buy the money on the sidelines wants the right deal. They're just not going to, especially in today's climate. So that's what I would do. I would, if you're serious about it, and team up with someone, talk to, find someone who's developing, try and partner. If you try and strike a deal with them. If you bring in a deal, maybe they'll partner with you on a deal, and, figure that out. But there's a lot of opportunity out there. I think the key is to find the deal. If you find the money, the deal will find the money. So the right deal, the money's going to be there. So I think our job as a broker, as a buyer, is to find that right deal. And they're there. You just have to dig through a lot of deals.
Gaurav, I know you've actually gone through this recently.
So your question on how long
how to get started.
Development deal takes, right? Development deal can take, it takes more time, right? And that's why we put it in the opportunistic bucket, which is where even your investment premium is high. Let's say if you can develop, the cap rate for a residential multifamily, Tom, 7 right now, 6, 5. I'm sure you want it to be 5. I'll say maybe 5.5 or 6. You put your investment margin, your 30% investment margin gets stacked on top of it. So you need to develop it to a 8 3/4, right? So first of all, finding the right deal. Development takes more time. You have to go through permits and entitlement and all those things, and development. So a couple of years. In my word, where it's not a ground up development, right? It can move as fast as what I mentioned to you, the deal which died. Start to finish, it was a month, right? And that month, Jim didn't know where I was. Like I was just like completely working on so many things. And then we were going to close on October 10th, and we were going to deliver to the tenant, doing all the work, everything, and we got contractors and everything by uh, uh, end of December. So there was a 2 year of everything, and 2.5 year we were stabilizing, right? Now, if it's a simple retail repositioning deal, right? I bought a lot of retail condos. It was literally by the time we would close, I would find a new tenant. So I was closing on this building, 501 Broadway, and it was at the same time I was buying 666 from Jared Kushner, and Jared Kushner used to own 210 Lafayette, and he's like, he mentioned to you in one of the meetings, he's like, I want to get rid of, and Capital One Bank was a tenant in that, and he wanted to do a net lease with JCPenney, right? A lot of moving pieces. He ended up mentioning to me in an elevator that, hey, I want to get rid of Capital One Bank. Like, if you have anything in mind. At the same time, I was thinking of buying 501 Broadway, where Erin Burney, which is, I think, a Korean company, was a tenant. Erin Burney, a Korean fashion brand. I'm talking about an example from 10 years ago. And I'm like, okay, can I actually buy this? And Erin Burney is not paying like $100 rent when the rent could be $500. And I know Capital One Bank. So by the time we closed, we gave the next day of closing, we gave the termination letter to the tenant, who was happy. They wanted to leave, right? They were just on the hook. And 2.5 months, Capital Bank was in. We stabilized the building in like 5 months' time. It could be as fast as that. So you never know. It varies from deal to deal.
Thank you, Garv and Tom, for this. Boy, if we had our other panelists on, we would be speaking, but there's so much to this, right? And I know a lot of people, we start as brokers, agent, corporate, trying to get involved. You start going the syndication route, putting money together, or a lot of people from what I saw, they went the development route, but nothing beats, as what we're saying, this network. Because, Tom, with you, Garv, anyone else, playing this game long enough, keeping my nose clean, staying in my lane, I do know who to go to. And what we're good at is assembling, the engine, I always say, is finding the opportunity, having the money, and having the operational expertise. Usually you have one, you're lucky to have two. Home run, you have three. Then we say you're printing money. I've always seen with your group, if you have these parts and pieces and you have the patience, right? We got to be patient. Don't overjump, don't overreact, because the problem is sometimes you get in too early, as we all know, and you got to ride the wave to forward the down and then coming back up. So this is through a lot of experience. And I just want to thank you both. Please reach out to Gaurav and Tom, and they do a lot more. We just wanted to talk about development capital. Thank you, Tom, too, for running our development committee and group. And Gaurav, as you do education for NYU with all the athletes, I mean, plug into these people, because it is a great opportunity. On LinkedIn, you may have to reach out 20 people a day to get one person to respond to you, unless you build your reputation up. So, Tom, did you want to say something to end?
No, I'm good. Thank you. Jim, thank you for putting this together. Really appreciate it. I wish everyone the best of luck and look forward to the next call. And feel free to reach out if anyone would like to chat further.
Yeah. I would just add something. So April put, patience is definitely key. I think that's very, very important, right? And I'll put it this way, we all know about greed, right? Nothing wrong with being greedy, but try being long-term greedy, not short-term greedy. That's one, right? Two, your reputation is everything, right? So I've seen a lot of people in the rush of doing their first deal. I just need to do it now. End up doing things which sometimes are unethical. It's a small world, small industry. What comes around, right? So you want to make sure you're building a good reputations, your integrity, your ethics, your moral values. They should definitely stay strong, because in these tough times, right? Some, like, I just want to do a deal, I want to get a paycheck, right? Can push you to do something which you may years down the line look back and regret. So that would just be my parting note.
Garv, that's a great thing. Keep your reputation, even though times are tough and hard. work with the team, because that's how you're going to get through this together. We all know, we've all, you know, I see a lot of people with the gray hairs, right? Or no hair, right? A lot of stress, but it is important, right? To be part of these teams, to be, you know, doing it right, because you a lifetime, you build up your reputation. You could destroy it in one deal, 15 minutes, and just, you know, work with everyone. So again, thank you everyone. Thank you, Gaurav and Tom, for being on the panel, sharing your wisdom. Please connect and reach out and join us every Wednesday for Top Agent Nation Commercial Wednesdays. We'll be covering different topics and what's kind of relevant to help people make some money, connect with great people, and get some business done. So everyone have a great day, and look forward to seeing everyone next Wednesday. Have a
Thank
good
you.
day, everyone.
Thanks,
Bye-bye.
Gaurav.
Thank you.